All right, good morning, guys. We're a couple hours into the stock market. Let's take a quick look and get a glance, try to figure out what these markets are doing. Before I do get started, though, I want to make an announcement. I have started just briefly working on my technical analysis training course. And what this course is going to do, just to give you guys a quick overview. First off, I'm not going to charge that much. I think I'm $99 is pretty much what I'm thinking I'm going to charge. I don't want to charge, 500, 1,000. I want this to be accessible to most or anyone who's interested in learning a bit more about technical analysis, how to actually read charts, how to trade using the charts to your advantage to give you that little bit of an edge over just the general public. So the training course is going to cover everything from trend line, how to spot trend lines, how to find profit targets and stop losses, how to read candlesticks and what they mean, and how you can actually interpret those candlesticks, how to look at all kinds of markets, not just like tech stocks or the NASDAQ, or how to read the market breadth and really understand what the general market is doing, from bonds to gold, all that. How to find divergences in the RSI, the MACD, the PPO. Looking for stocks, kind of really finding stocks to target, and money management, which will involve position sizing, risk management, things like that. That's very critical. And then finally, just some basic tools of the trade, some tools that I use for just in the enterprise of trading. So that's what it's going to be. It's going to take me a little bit to get it all together. I want to make sure it's it's of good quality. But again, I'm working on it, so I'll keep everyone updated as things go along. All right, enough of that. Let's get into these charts. Triple Qs. All right, so we ran down and tagged. They stepped in a little bit early, but this 280.30, I had it at about 280.50 actually. Looks like they stepped in at about 280.86, but I would say that's a pretty successful tag of that support line. So what I did is I covered my short position right down there, and now I'm expecting somewhat of a bounce off this level. Where does this bounce go? Well, I don't know. It should go higher. This is where the buyer should step in. So if this rally is going to continue, this is where it should start from. The continuation of the rally should be right here. So I am, I'm going to wait and see on any index shorts. I'm not short triple Qs. Look at, 285.75. I suspect we probably go a little higher, maybe up to 289.46 would be maybe an area where if they're going to sell it, that's where they'll sell it. If, that would keep the downtrend intact. You can see we've been kind of working this downtrend right here. So if they run it up and briefly pop it intraday, maybe they gap it up to 289.40 and then it sells off, that would keep this downtrend still intact while, creating kind of a nice little trap or bull trap, or tricking people basically. So that's what I see right now in the triple Qs. So there's obviously the potential to go long right now. Really, it would have been better right down there at the tag of that support line, but there is the potential now that we have a little bit of a rally here. So I'm going to watch for that. SPY basically briefly fell down within this zone. They stepped in early. They're buying it back. It's back above this support range of about 342.71. That was really the top back here, and you can see we've been trading right at it. It's been holding a support several times. So, with brief little undercuts, but it's not breaking. It's bending but not breaking, I guess, is a way to look at it. So, this is where the buyers should step in, and so this is what makes sense that the buyers are stepping in here. SPY also, you can see bullish divergence right there. It's starting to turn up and confirm. Sorry, I was looking at where my PPO was. It was up above my chart. Flipped it down. But that same with the PPO, starting to turn up and confirm. So you can see here indicators are starting to work their way higher, and we made a slightly new low right here, creating that divergence. So the momentum is starting to turn bullish, and I would expect price action to follow. Of course, that's only in the short term. You know, we're just looking at an hourly chart here. We don't have anything on the daily that shows a divergence. The daily still shows that we are continuing to move higher in a bullish trend. Although we did have, you know, on the SPY here, we haven't even put in divergence, negative divergence right there. And I got lines all over the place. But you can see here, we haven't put that in yet. So a slight new high, if we can pop above this peak way up here at about 365 or so, if it does it soon, would put in that negative divergence on the daily chart. So that's what I see there on the hourly and the daily. We're at support, so we should hold, but if we don't, then, you know, we could potentially go a lot lower. Same with IWM, holding support. You can see right here, 159.56. Impulsively bouncing off that today a little bit, so we're just popping up off it. We'll see if that can hold, but that is support, so it should hold. This is the big sideways trading range. You can see that this thing's been contending with for a while, and so we're back at the top end of that range. We broke, it was a breakout, and it keeps holding as support. So if that breaks, expect to move to the bottom of the range all the way down at 145.40, and if that holds, we could move higher from here. I don't see any divergences here on the hourly. This is not negative divergence because we didn't make a new high. It's just, this just shows momentum back here was moving down. Price was also moving down, so everything was working in sync as expected. And on the daily here, yeah, no real negative divergence here on the daily as well. So slight, you could maybe call it slight negative divergence. If you go back a little bit, then yeah, there's a slight negative divergence right there. These can take a while to play out. So really, what I'm watching on this, a break below this 159.60, and a break and a close below that, bearish, and if it holds and can move higher, bullish. Big false breakout or bull trap in gold today, and this is what I was talking about in the other video. I saw the breakout, but it didn't look impulsive, and I thought that might be a bull trap that they're setting, and it looks like it actually was. So here's what we got on gold. This is gold bullion. We have this downtrend line that we've just been walking down. Gold has been downtrending, and what they did yesterday is they broke it to the upside, looked like a breakout, and came back in for a back test right here, looked like it was about to go, and then it just impulsively failed. So that's a bull trap. It's also a head and shoulders. You can see here's the left shoulder, here's the head, here's the right shoulder, and you break the neckline and come down. So bull trap in gold, which is why the miners are off today. So now that this bull trap is in and it's clear, I really do think this 1790 is in the cards for gold. So I'm going to continue to look for that. It's taken a while, but it continues to tell me that that's where it's headed. And the dollar, the dollar's not catching too much of a bid today. The dollar's kind of weak. I mean, yeah, it's up, but still not. It's not up like you'd expect it with what gold just did. So that's interesting. We'll see. We'll continue to watch this. In general, I see the dollar's this big sideways choppy range right now. I still think the dollar's heading up to 95, 95.50 or somewhere right around there. But we got to get out of this sideways chop zone. Let's look at these fangs real quick. These are interesting. Apple back down within this trading range that we were in for a while. So, kind of a false breakout right there. And this level right here that I have up there, this is where the split action back in August, where Apple split and everybody got super bullish and thought it was the greatest thing in the world. That's where this kind of price action took place, when they split and people bought it. And you can see it came right back up and started to trade in that zone and sold off. So it's not letting the people who bought the split get out with. It's not letting them basically get above water in their trade. So those people will most likely become panic sellers. And when you see Apple really start to move down, it'll be because a lot of these traders are just panic selling their Apple. And that might be the buying opportunity, so we'll have to continue to watch. But again, we're back within the range, so really top of the range that I see right now, resistance 118.50, and bottom of the range about 113. So we're going to watch those levels for now. Microsoft, again, back down within the range as well. Resistance 215.60. Yeah, and support, you know, I really think the bottom of the range, 190, it's about 199, we'll call it. We're going to go with those levels for right now. Amazon, back down within the range. Double top on Amazon as well. You can see here's the top, here's the double top, and continuing to move lower. Resistance right now, 3203. Support about 29 or 2,930. Google is one of the stronger ones. Google is, you know, kind of moving higher. It's you know, this one looks more bullish than the rest, that's for sure. Let's look at the daily here. We do have negative divergence on the daily though, so I'm not sure how much further Google's going to be able to run without the others. It most likely is going to turn down and head towards this 1482. All right, so trade idea here. I'm looking to go long DraftKings, and not yet, but there's the setups there. So you can see we have bullish divergence here on the RSI and the PPO. We're building momentum basically. The buyers are stepping in, the shorts have been covering, and it looks like we're starting to build momentum for what looks like a bear market rally. So what you need is a break above the, you need a breakout, some sort of a breakout. And right now, it's not the cleanest, but you've got this downtrend line that we've been kind of walking down. So I would say, just to give it the benefit of the doubt, mark it right about there. If we get a nice hourly close above 42.50, that it's kind of, you know, it's moving down. So we need to, whenever the breakout comes, but a nice hourly close breakout, then that should move this thing. That should set this up for a move, probably up to about 49.30 or 47.80, kind of that area. So that's the trade idea that I'm looking to go long on. And that's a move of, you know, about 12%. So it's not there yet. There's no entry. There's no trigger. I want to make that clear. But the setup is there, so we're waiting for it. Same thing with Redfin. You can see on the hourly chart starting to build some bullish momentum on the RSI and the PPO. Price continues to move lower. So this could be a false breakdown right here. Look for, you know, you got this trend line on the hourly and it's on the daily that's we've just been walking up, and we broke below it. But if they can recover that, that would be a bear trap. And the RSI is starting to show some momentum, so watch for a recovery. I don't see it in the charts yet, so I mean, I'm not as interested in this one as I am DraftKings, especially with this rejection candle. Look at this rejection candle right here. Today when they opened it, they popped it right up to resistance and it sold right down. So it is getting rejected at resistance, but if it can recover and you see some sort of impulsive recovery back up, then this would be the bear trap. So watch for it. And I would say if that happens, a move up to about 50 bucks is would be a good time. Tesla's all over the map. The thing is, Tesla's up 2%. It's still holding support right here at 420.38. And it is, you had some bullish divergence right there on the hourly. There it is, where we made a slightly new lower low. But we've seen that play out. Here's the earnings. You know, it's a really small divergence, and earnings, they've gapped it up. Pretty weak price action off of earnings today. Usually the last couple of earnings, when they've been beating their earnings, they Tesla's been up like 10%, 15%, massive amounts, and today it's only up 2%. It's sold off a little bit. Pretty weak, muted reaction, I would say, to earnings. So I'm going to read that as kind of a bearish price action. Even though we're still above support, still have negative divergence on the daily, and we've broken price support on this trend line here. So I think lower. It really does look like we're headed lower in Tesla. Next stop for Tesla is probably this 336. 336 area is where we'll find some support. Peloton. Peloton still looks like it's heading down towards this trend line. Depending on when we get there, it's going to be in the 105, maybe to 110 range. So somewhere right in there. Looks like that's where it's going. And the thing I like about Peloton is on the hourly, we did have negative divergence right here, which I think sets us up for the move down to that area, 105 to 110. But we don't have it on the daily. So what I think is maybe we hit that, we get another bounce higher, creating a daily negative divergence, and then we'll roll over for the bigger move down. SQ continues to work to the downside. Big negative divergence here has been intact and in play for a while. That was our setup. We got the trigger when we broke price support, and then a little bit of a back test. Now I didn't see this one until after it had done pretty much this back test action right here. So I took it short up here, and it does continue to work. So I think next stop, we're probably going to hit this 170.60, get a reaction there. But I think that SQ bigger support is right down here at 158. So I think that's where this is heading in short order. Etsy holding this support line right here off the March lows. You can see we had a reaction. There's your low of March on the daily chart. There's another reaction. Then we had a reaction here, another reaction here, and we're getting another reaction today. So that's a valid trend line now. Plenty of reactions to validate that. Let me extend that out. But on Etsy, big negative divergence still intact on the daily chart. So that tells me now what we're looking for a continuation to the downside is a break of this trend line. Impulsive breakdown sets us up for a bigger move to the downside. So we'll watch for that, and if we get that, we're probably going to head down. You don't have a whole lot of reactions, but we got a couple right in here, right about there. So I would say that's going to be probably somewhere in the price support area around 98, 70, $100, something like that. We'll just throw that up there for now. Carvana looks like it's bouncing a little bit, but still looks like it's coming to fill this gap. So I think we're going to fill this gap at 174. And what it wants to do today, well, it looks to me like it's going to run up and tag this 280 area. Might overshoot just slightly and then roll over, but it looks like it's running up to tag that. That should be major resistance right up there. The sellers are looking to step in, I think, and then we'll move down to fill the gap. That's what I think is happening in this one. PHM continues to work, down 5% today. Again, all these trades I've been calling these out before they were noticeable. Now is not the time to jump on this trade, to get short. It's late. You're too late to the party on this one. But there's more opportunities. We'll find some more. But this one, I was talking about this one for a while. I spotted the negative divergence there. Here's your uptrend line right there. We broke trend. I used all the back tests as opportunities to add to my short position, and now we're pretty much impulsively rolling over. Looks like we're going to roll down and fill this gap at 39.56. I would expect people to step in early, and we might not actually fill the gap, but I think we'll come pretty close. So I'm watching for that, looking for that to continue to move down towards that gap, and I'll be covering down there in that area on this trade. So continues to work there. Anybody that's interested in XOM, I'm not exactly sure what's going on with this one right here. This is a daily chart. We're just slightly above resistance, but it's just barely above it, and it's on a daily, so I could see this fading and closing back below this 33, it's about 33.68, 33.70 right in there. If we do fade and we get some sort of an impulsive sell-off down here below this 32.20, that would be a divergent low if it happens anytime soon. So that would actually be a good opportunity to potentially step in and buy and go long around, especially a back test of this broken trend line around 31.50, right around there. You'll have a lower price and a higher momentum indicator. So it would be a divergent low, and that would be the area I'd be looking to add to a long position. And I'll wrap up with PayPal. So PayPal yesterday, I think they reported earnings yesterday, and people bought it, and it popped higher. But and this is the point that I want to make. When it popped higher yesterday, that was a divergent high. It was you can see we popped higher above kind of all the previous highs. Actually, I think it made a new all-time high. Yeah, it did. And that was on lower momentum right there. So that's turned down. That was actually the key area to be adding to a short potentially, or at least queuing in and knowing that this is set up to go to the downside. And today they step in and smash it back down 4%. So you can see here on the daily, big negative divergence there on the daily as well, right there. So this one is, actually setting up for a good short trade. The high yesterday put in a new daily divergence. So I'm looking at a break below this 203.70. I don't know if we'll get it today. It might come in the form of a gap down. But if we get some sort of an impulsive breakdown, to me that sets PayPal up to sell off, probably coming down to this 184.94. And potentially a lot lower. You've got a big gap all the way down here. We could fill that gap, and that's down at 130. So from where we're at now, that would be a drop of 36%. That's completely realistic, and so this is actually starting to set up. So I'm going to keep an eye on this one in the next few videos. This is definitely a setup here. So, okay, guys, that's all I got. Thank you. Leave me a thumbs up. Catch you on the next one.